Looking at market news now, Asian stocks fell as U.S. equity futures and the dollar jumped as a lockdown in a Chinese metropolis and a hawkish drumbeat from central banks further upset investor nerves. Locally, U.S. retail giant Walmart has signed an agreement to begin buying the 47% stake in South African retailer Massmart that it does not own. Massmart has said on Monday that its majority owner Walmart had offered a 6.4 billion rand to purchase the remaining shares and to delist the company from the Johannesburg Stock Exchange. Meanwhile, Impala Platinum reported a 17% decline in full-year profit as platinum group metals came off record highs and costs surged. To give us some perspective and unpack some of the latest developments in the markets, we are joined by Bright Khumalo from Vestec Asset Management. Bright, thank you so much for your time. I mean, how are you looking at global market sentiment? Because right now everyone's talking about this hawkish Fed. We're all looking forward to the rate hikes, whether you're looking at ECB or the Fed. What's your sense of the market right now?
Yeah, I mean, I think you mentioned a very important market driver currently, which is, the central banks. And last week, the Fed basically reiterated their hawkish stance, as you said. They're not putting the brakes off, targeting, inflation, meaning they want to carry on increasing interest rates to that targeted number of 4% if they have to. And if a recession happens in the interim, I guess we have to take the short-term pain, is what they're telling us, without using those words specifically. And on the markets front, as a result, I mean, the month of August, what an awful month for returns as a result. And they had gained up quite nicely up until last week Friday, where, the last 4 days of the month were so bad that we erased all of those gains of about 6%. Down to being down basically on the S&P 500 4.2% for the month, and on the NASDAQ dropping about 4.6% respectively there. So it hasn't been a good month in that front. But if you looked at those returns locally, I mean, we're up about 2% before today's big down day of 1.32%. So the South African market is done relatively well, obviously on a relative basis, but I mean, those problems that the Fed and other central bankers is worried about, runaway inflation, is still an issue here in South Africa, and we saw recently from our own central bank.
So we've had like a slew of company results come in, especially this week. I mean, if you had to pick one company that sort of caught you by surprise, whether on the upside or downside, which one would that be?
There's two companies, right? So one you've mentioned is Massmart, which had their results, I think it was last week or Monday, I can't remember. The share price, rallied about 44% because of that announcement you mentioned by Walmart to own basically all the shares they don't own. So obviously they have to make an offer to existing shareholders, and the market sort of cheered the news, which is good. Because if you've been holding Massmart since the initial, purchase of Walmart, you actually haven't seen any returns, even if you include total returns, which is inclusive of your dividends. It's been a laggard, to say the least, in an industry which is retail, South African retail, which has outperformed the market. So they've been the laggard in that index. So, I mean, finally, you're seeing some returns. Hopefully, you've broken even and you've sold your shares now. Another company that caught my attention was Aspen. It had a great run up. When it was announced that they're going to be taking care of the COVID-19, vaccines for Africa and South Africa in terms of manufacturing capabilities. But unfortunately, that sort of softened, and since then the share price has tanked. On this news of the earnings, and obviously that there's an agreement with Serum Institute, was positive for the company. It was up in a down market. So we'll take any positive news, at this point, because it doesn't seem like there's anything on the horizon that looks positive for shareholders and investors in general in the overall and offshore markets.
If you to, I mean, when you look at how U.S. earnings could evolve in the second half of the year, is there a base case for Vestec in terms of what you're expecting?
So basically, according to FactSet and Bloomberg and other big houses that run these numbers, the second quarter numbers were expected to the average company to increase by 8%. Obviously, that's a case to case basis. Some of the high PE, high growing companies are obviously going to be pulling that average up, and the lower growing are going to be pulling it down. But you get what I mean. And we mostly sort of jump over that hurdle. So now the hurdle is lower, which is between 4 and 6%. I mean, the companies we follow are going to be well above that. But unfortunately, if you're a high growing stock or company and you don't meet the actual expectations that the street expects, in the short term you're going to be punished for it. But in the long term, we're seeing these high growth businesses pull their weight. But in the short term, there's definitely going to be a lot of pain when it comes to volatility. Whereas if you look at things like energy stocks, for example, they're still going to reap a lot of rewards, even though that oil price has gone below $90 per barrel. But they're still very profitable at this stage. So for the next year and a half, or maybe even close to 2 years, they're going to be doing very well. Hopefully, they'll be holding up the S&P 500 index like they've done in the first 2 quarters.
Bright, we've run out of time. However, thank you so much for your time this afternoon. That is Bright Khumalo from Vestec Asset Management.